Hello, everyone, and thank you for being here. This is Mohammad Yaoud, Market Analysis Manager at PU Prime, and thank you for being here today in our last webinar in our campaign You Can Be a Trader Too. Today, we're going to talk about the risk management and how important it is in your trading in the financial markets. Today, our title is How to Manage Your Risk While Trading. It seems quite important and it seems quite complicated to manage your risk while trading. However, today, bit by bit and piece by piece, we will try to get this covered as quickly and as easily as possible. So let's start quickly during this session. We have some housekeeping rules that we will need to follow today. Of course, you'll get these slides or recording within 3 days after the webinar. Of course, as usual, we will be sending you the slides or the recording within 3 days through our email. Please keep your camera and microphone off during the entire event so we can keep and maintain the best possible environment for us to learn and to grasp all of the information given to you today. And of course, if you have any questions, please leave it in the chat box during the session. And we will be having, of course, our usual question and answer session at the end of the webinar. And we will be answering all of the questions at the end of today's session. If you basically never missed any previous webinars, so of course you know who I am. In case today is your first day with us, so let me give you a brief hint about myself. My name is Mohammad Yaoud, and I'm the Market Analysis Manager at PU Prime. I have 4 to 5 years of experience in the financial markets as a financial technician. I'm a certified financial technician from the International Federation of Technical Analysts, as well as a certified financial technician and a market technician from the CMT Association. Basically, my main job focus is not only to give you some analysis or trading signals. It's not my job to tell you what to do. However, my job is to teach you how to do it on your own. So by following me, basically by time, my job is to teach you how to do it on your own. And that's why basically we're here today and we have been with you throughout this whole journey, throughout this campaign to teach you and to tell you that basically you can be a trader too. And today is our last station throughout this journey. So about PU Prime, basically we are a world leading online broker. We offer you more than 200 plus assets and products that you can trade on. Basically, by the beginning of the first session, people were a little bit confused. What do you mean by assets or financial products? But by now, I do believe that you now understand what do we mean by financial assets or products. What do we mean by forex indices, commodities, shares, and cryptocurrencies? We basically mentioned a lot about those in details. We mentioned the currencies, the indices, commodities, shares, and cryptocurrencies in details. So we offer you this in PU Prime. Basically, we have multiple offices around the world. We offer our services to more than 120 countries all around the globe. So basically, if you're looking for a broker who can help you trade in the financial markets with success, so we can basically help you do so with ease. Today, what we're gonna talk about is basically this is our content for today. We are gonna mention some key terminologies. It's basically very simple to understand. We're gonna mention the balance, the equity, and the leverage. What are the balance, the equity, and the leverage? We mentioned leverage during one of our past sessions, and we're gonna talk about the leverage more in details today, all along with the balance and the equity, and what is the difference, what are the differences between both. And we're going to talk about the margin level and how important the margin level is and why it is important, and what is the difference between the margin call and as well as the stop out level. And this is something basically that most of the experienced, even experienced traders get confused about a lot. We're going to mention this today. We are also going to mention the risk to reward ratio and how to maintain a good and a balanced risk to reward ratio. Because even if you're the best analyst out there, even if you are basically getting 9 out of 10 trades, you basically get profits 9 out of 10 times in the markets. But the only loss that you have, you basically lose a lot more than what you gain in the other 9 wins. So basically, you end up losing money in trading. So basically, this is not maintaining a good risk to reward ratio. So this is what we're gonna mention today: how to maintain a good risk to reward ratio to make sure that even if you are winning as much as you are losing trades, you are still gonna make good money out of trading. And we're gonna end our session today, and we're gonna end our campaign and our webinar series with a MetaTrader 4 practical session today live. And of course, we'll be having a question and answer session at the end so we can answer all of your questions. So let's start with the balance and equity. What do we mean by the balance and the equity? We had a look before during those sessions on the MetaTrader 4, and we will still have a look today. We mentioned that we do have something called the trading terminal that you will always find at the bottom of the MetaTrader 4, and this is basically it. We will be having this box here, which is the trading terminal. We mentioned and we had a look before on this trading terminal, basically where it mentions all of the trades that you have, any open trades, and the profits that you're having on current positions, and it details out all of the positions that you're currently having on your current account. So basically, you will find immediately that you have two numbers. The first one says balance, and the second one says equity. There's a very slight difference between the balance and the equity. So here the balance says 9,850, where the equity says 9,742. What's the difference between the balance and the equity? In order to understand this, let's check what does the definition say. So the balance says that it's the total amount of capital in the trading account. So basically, the total amount that you have in your trading balance and your trading account, the total amount of funds that you have. So when I tell you, when I ask you, how much of money do you have in your trading account? You will tell me I do have 9,850. This is how much, or how much your account is worth. This is the money that you have in your trading account. Okay, so this is your balance. This is what you have. This is how much your trading account is worth. The equity, on the other hand, is basically the total capital in the trading account plus or minus any floating profits or loss. So in this example that you have on the screen, in this screenshot that I had from my MetaTrader platform, the equity is slightly lower than the balance. We can see here that the balance is 9,850, where the equity is slightly lower. It's 9,742. Why is that? Because simply you can see that we have an open position on gold, and the profits is a floating profit of negative 108. So we have a floating loss of $108. So this definitely means that if we took the balance 9,850 and we deducted $108, we will have this equity 9,742. So basically, the balance is something that it isn't adjustable, or it isn't floating by time. The equity is something that's always floating based on the floating profits and losses according to the open positions. So if the positions that you're having is making profits, the equity is increasing. If the positions that you're having, the open positions, is basically having some floating losses, basically the equity is decreasing, and so on and so forth. What happens if you close a floating position or an open position on a loss or on a profit? The equity basically immediately becomes the balance. So in this case, if I close this position on a loss of 108, then immediately the equity will become the balance, because I've lost $108 on this specific position. So instead of being the balance 9,850, the balance will then become 9,742. This is the new balance because I've entered a position and I've lost $108. dollars. Let's have a very quick look on this on the MetaTrader platform. Here it is. Basically, the same position is still open. So the balance it's still 9,850. However, the equity is now 7,000. The equity decreased a lot. Why is that? Because the open position is now, it's not only a loss of 108, it's now a loss of 2,600. So the equity is decreasing because the open position is losing a lot of money. What happens if I immediately right now close this position on this loss of $2,000 or 2,500? You will find that immediately the equity will become the new balance. Have a look. I'll just close this immediately right now. The new balance is right now 7,300, and it's the same as the equity. The equity is now stable, it's not floating anymore, simply because there are no open positions anymore. If I open a new position right now, the equity is now back again to moving because we have a new position. The new position is making money or losing money. So according to the changes in this profits, the floating profits or loss, the equity is basically moving. However, the balance is still stable. If I close this on profits right now, the new balance will basically increase with this profit. Have a look right now. It increased basically 7,300, and instead of being 44, it increased to 48 because the profits were basically $4, and you can find this in the account history. So that's basically the difference between the balance and the equity. The equity is something which is affected by the floating profits and losses, whereas the balance is something which isn't affected unless you close the open positions on a profit or on a loss. So that's basically the difference between the balance and the equity. Beside the balance and the equity, you will find another three numbers: the margin, the free margin, and the margin level. Let's start with the margin. If your account is basically 9,850 and you're entering a new position, your broker will basically require you to pay some part of this of your trading account as maybe, let's say, as some sort of an insurance, because basically we mentioned previously in a previous session that your broker will give you leverage. You're not only trading with your trading account or your trading money. However, your broker is giving you a helping hand of maybe 500 um, times your trading account, or maybe 300 or 200. It depends on the leverage you're choosing. So you're not only trading with your money, you're trading with your broker's money as well. So basically your broker will require you to give some sort of margin or some sort of insurance to make sure that part of your money or part of your trading account will not be lost during this trading position. So this is basically the margin. So for this position that we have on gold here, the sell on gold for two standard lots, basically the margin where the margin was basically $680. So this is a fixed amount, $680. Okay. The remaining amount of your trading account is the free margin. So as soon as you enter a trading position, let's say your trading account gets divided into two parts. Your broker uh, takes part of your trading account, puts it aside, some sort of an insurance, because we provided you with a huge leverage, 500 times your trading account. So this margin is on site. This is basically the $680, and you are free to basically lose the remaining part of your money, which is the free margin. In this case, it's the $9,000 and $9,061. This is the free margin. you're free to lose this amount. Okay. So what is the margin level? The margin level is basically the equity divided by the margin. How much basically is the remaining amount that you have in your equity versus the amount that we put aside from your trading account. It's somehow mathematical, it is somehow philosophical to think of. However, we want to know how much you have in your trading account remaining versus how much we kept aside. Okay. And we will know why is that later on. So quickly, let's have a look on the MetaTrader to know why we do this. Let's try and maybe one lot on gold buy. As soon as we enter this, look what happened. We enter the trade, the equity is already floating because we are having some profits here or loss. The open position is having profits or loss. It's floating already, so the equity is floating. However, the balance is still stable. The margin here is stable. It's not changing. The margin is not moving because it's only one lot. So as soon as we entered this one lot, the broker already took and put aside $342 as an insurance for this one lot for standard lot on gold. Okay. And the free margin is basically what we can lose is the remaining $7,000. If you roughly add $7,000 and 342, you will roughly have this 7,348, which is the balance of the account. So the margin and the free margin is basically your balance. What is the margin level? The margin level is the equity divided by the margin. How much you have remaining in your account versus, or how much versus the margin that we have in the account. Okay, this is basically it. Those are the numbers that you need to know, and basically the most and the most important and the key number that you need to always watch is the margin level. This is something that you always should and you will have to keep an eye on, and let's know why is that. Okay, so we were talking about the balance, the equity, the margin, and the margin level. And basically, we mentioned that the key number that you will need to watch is basically the margin level, which is basically the equity, which is the number or the amount of funds that you have remaining in the account, plus or minus any profit or loss, uh, divided by the margin, which is the fixed amount of money that you paid to your broker as an insurance to open your positions. Why is this basically the key number to watch? Let's know why. We have two things basically that we need to watch for: the margin call and the stop out level. The margin call, basically, the margin level, as we mentioned, is a percentage. Okay, what happens if this percentage is 100%? What does it mean that the percentage is 100%? If this margin level is 100%, it means that the equity is now equals to the margin needed to enter the trade. This means that basically the free margin is now zero. You have lost all of the remaining amount in your account, and basically the equity is equal to the margin, which is the amount that you have paid as an insurance to your broker, and you have no money left. This is then called a margin call. You have lost most of your amount. If you have, say, for example, $9,850, the margin is $680. You have lost all of the remaining amount, and the equity then becomes only $680. So then becomes the margin level 100%. This is then a margin call. What happens at a margin call? Basically, this bar then all becomes red and nothing happens then. Okay, this is a margin call. It's just some sort of a notice from your broker that there's something wrong happening with your positions and you're losing too much money, and that you need to focus and you need to sort out your positions before it's too late. Then what happens if you didn't sort out before it's basically too late? What happens if this margin level is now 50%? What does it mean that the margin level is now 50%? This basically means that the equity is now lower than the margin needed to enter the trade. So say for example, if the margin is $680, this is what you pay to your broker as an insurance to open this trade. $680. Basically, you started to lose part of this money. You now lost 50% of this money. You only now have around $340 left in your equity because you lost $50 or 50% of this amount. This is now called the stop out level because basically your broker will not allow you to lose more than this. This is insurance to open the trade. You're not allowed to lose this whole amount. Okay, this level, stop out level, basically varies from one broker to another. So you can find some brokers who have 100% stop out level, which means when the margin level is 100%, you will get stop out. Okay, basically this means that the margin call is the same as the stop out. At PU Prime, we don't. At PU Prime, we have the margin call at 100% and then the stop out at a 50% because basically we care about your money. So we give you a little bit more chance to recover from your losses. So we give you more 50% stop out chance and so on. So this level varies from one broker to another. When you reach the stop out level, and in our case it's 50%, when the margin level is 50%, the broker now starts to close out your losing positions in order of higher losses to smaller losses, to smaller ones. Say, for example, if you have 3 open positions, the highest losing position, you're basically you're losing $2,000 on your highest losing position. We will close this one, and then we'll start to close the other one, and so on and so forth. You are now basically losing your trading account. This is what happens if you don't watch your margin level. Let's try and basically do this live right now. I don't know if we will be lucky enough to do this. It's a demo account, by the way, and this is done only for educational purposes. This is something that I don't recommend that you do. You shouldn't do. And this is done on a demo account. You can find this. It's a demo account. This is not real money. It's $7,000, not real money. Of course, I wouldn't do this on my personal money. So let's try to liquidate this money right now. Here we go. This red bar is happening because basically the margin level is below 100%. So this is a margin call because the margin level is below 100%. If we are lucky enough and gold basically went up a little bit right now, the margin level, because we are short gold, we are selling at the moment. So if price went against us and went up, margin level will go 50%, and we will get this stop out. However, I hope this happens live at the moment. I don't know if we will be lucky enough to do this. The free margin is negative, of course, because we don't have money. It's negative. The equity is now lower than the margin because we paid to our broker 6,846 as insurance to open this trade, and the remaining what we have in our trade is 5,000 only. So if we divide the equity by the margin, of course we will get what is lower than 100%. So this red bar is now the margin call. We are having this margin call at the moment. It's in red. So this is our first, let's say, hint or notice from our broker on the MetaTrader platform. Something is going wrong. You are near to your stop out level because the margin level is now below 100%. Take care, you are losing money. Okay. Right now, I do believe we will not be allowed to open new positions. Not enough money, of course. You are not allowed. In case you are having a margin call, by the way, you will not be allowed to open new positions because you are already losing money. Uh, Here's a buy. Let's close this one. It doesn't seem that it will basically go below the 50% at the moment. So let's continue our session at the moment with the risk and reward ratio. And we'll have an eye real quick every now and then. The risk to reward ratio. Okay, let's say for example you are basically a trader now, you do have some knowledge about the technical analysis or any sort of analysis, whether it could be technical analysis, economic or fundamental analysis, statistical analysis, or whatever it is, or you are basically a financial markets analyst. Okay, you do market research and you know when and why you should buy or sell anything in the markets. Okay, um, say for example you entered 10 trades, you took 10 trades during this week. Out of 10 trades you actually won 9 trades out of 10. So you succeeded in predicting the market direction in 9 out of 10. The question is, did you make money? Did you make profits or not? Most people would say, yes, of course, you are correct 9 times out of 10. So you most probably made tons of money. The answer is no, not sure. Because in this one loss that you have made, you could have lost more than what you have made in profits in the 9 wins that you had. It's not about how many times you're correct or how many times you're wrong. It's about how much money you make when you're right and how much money you lose when you're wrong. This is the risk to reward ratio. How much you're risking in order to win how much money and um, and so on. So the risk to reward ratio represents the potential reward an investor can gain for every dollar invested. Okay. Many investors utilize risk to reward ratios to compare an investment's predicted returns with the amount of risk required to attain those returns. It doesn't make sense if you have a $10 account. Okay, if you only have $10 in your trading account, it doesn't make sense that you risk those $10 in order to gain $3. Doesn't make sense. Even if you are right and you made money, you only made $3, so your account is now $13. However, if you were wrong, you could have lost your total trading account. This is not a logical risk to reward ratio. The logical risk to reward ratio would be um, if you could basically risk $3 in order to profit $10. So it's either your $10 would be $20 if you're right, or maybe $7 if you're wrong. This is how you make money uh, cumulatively. I mean, time by time, trade by trade. Even if you're wrong once, twice, and 3 times basically buy time. You will make money because you are working with a sound risk to reward ratio. So consider the following scenario. A risk to reward ratio of 1 to 7 indicates that an investor is ready to risk $1 in exchange for the possibility of earning a $7. This is good. A risk to reward ratio of 1 to 3 indicates that an investor should anticipate to invest $1 in exchange for the possibility of earning $3. Again, this is good. I'm having a look on the MetaTrader 4. It doesn't seem that the margin level is going down at the moment. Okay, that's an old. Okay, I'm done with today's theoretical slides part. Let's continue our session on MetaTrader 4. Okay, why it is not. Okay, just a moment, please. Here we go. Okay, so the margin level is still here around 108, 109. It's not going down basically. Um, I really did hope it went up. However, if we tried another sell at the moment, if we tried another one, it would accept. Oh no, not enough money. We're just around the 100%. Ah, okay. Okay, so again, let's do a quick recap of what we have explained in today's session. So basically, the balance is still basically 7,210, with all my respect to what's happening here, to all the profits and to all this. It's basically still here the same balance because we haven't closed any positions. What is basically changing is the equity. It's floating here based on the profits floating, or basically the loss here. We have two open positions. The first one is with 20 lots, and it's down with a loss of around 1.5k, around 1,500 thousand dollars. And the other one is only with one lot, and it's down with around $72. Okay, the total is around $1,000 of loss. So the equity is down with around $1,200. The margin is 7,189, and basically this margin is combined. This margin is what you have paid as an insurance for both your trades, not only this one, but both of them, because each trade you pay for it a margin. Each trade you pay for your broker what seems to be as an insurance to enter this trade. So the margin here, 7,189, is basically to enter those two positions. Margin level is, I really hope this, okay. We're so close to the stop out level. So close. So close. So close to the stop out level. Please be 50%. Okay. Not now. Okay. The free margin is basically what's left to lose in your trading account. It doesn't make sense to be negative. Yes, it is, because basically we are starting to lose part of the margin itself. And the margin level is the equity divided by the margin, and it's of course below 100% because the equity is now lower than the margin. And that's basically This is the trading terminal. If you want to have a look on the previous trades, what do? You enter your account history, and this is the second trade, the third tab in the trading terminal, and this is where all your trades are. We started this account basically on the 30th of June, and that was our first webinar, our first session live. We started our balance basically with a $10,000 demo, and I do hope that we will basically be able to stop out this account before ending our last session. And we have been trading this account throughout the sessions. We have learned together how to buy, how to sell, how to add or delete a pending order, buy stop, sell limits, buy limits. We have done lots of orders, and this is the account history. This is basically what you need. Inside the trading terminal, you will have other news, alerts, mailbox, market signals. You can have a quick look on it. However, it's not as quite as important. The two key things that you need, basically, we reached margin level 50%. Okay, what happened is you will find that we had two positions. Now it's only one. Why is that? Because basically the margin level reached 50%. Our broker started to close out positions, and the position which was basically the highest in loss, which was the 20 lots sell, is now closed out automatically, and you will find it in the account history right here. Here it is. Sell for $20. It's now closed out here for a loss of 3,460. The balance is now 3,750, and the equity is adjusted accordingly. It's only one trade. So what happened is basically a stop out. Our broker started to interfere automatically and to close out positions because our account was going out, turning out crazy. There was something happening uh, wrong with the trades, and basically this happened. So yes, we were able somehow to reach the stop out level. Let's see if we could do this one more time. Another 20 lots. No, of course not. Not enough money. Okay, 15 maybe. Not enough money. Okay, another 10. Still not okay. Can you accept 5, please? Okay, thank you so much. uh, the margin level is still 170. I think we can do another. The margin here is 2000. I think we can do another 3. The margin level is now 110. We can do another 3, please. No. 2. Okay, another one, please, for God's sake. Okay, thank you so much. I don't want to do this anymore. Okay, this is how you can margin your account. This is how you can lose your money. Please don't do this. We're just doing this for education and purpose only. Um, so that was all for today's session. If you have any questions, please leave it in the chat box.